In order to succeed in trading, you gotta do things differently than everybody else. You gotta have some sort of edge over the other market participants. So here's what we're gonna do in this video. I'm gonna show you a crypto day trading strategy that's gonna give you an edge. Very few people know this strategy. I'm gonna show you the setup for the strategy. I'm gonna give you the rules for when exactly to buy and when exactly to sell. And I will test the strategy for you so you can see its performance. If you're up for that, just keep watching. Alright, so here is what the setup looks like. I want to show you how to set up everything from scratch. So let's open a plain chart and let's set it up. The first thing that you have to do is to navigate to this feature right here, layout setup. You click here and you choose two separate windows. Now, on the left side right here, you have to select the window and you have to switch to the 15-minute time frame. And on the right side right here, you have to select the window and to switch to the 1 hour time frame. Then we're gonna open this feature one more time and you have to make sure that you have the symbol enabled, interval disabled, crosshair enabled, time enabled, and date range disabled. Now we're gonna start adding the indicators. We're gonna start with the right chart. You will select it and then you will click on indicators and search for EMA, moving average exponential. You're gonna add one. Then you will search for MA, moving average simple. All the way down here, you will select it. Then you will search for stochastic. Right here, the first one, you will select this one as well. Then we're gonna select our left chart right here. We're gonna select indicators one more time and we will add the stochastic on this chart as well. Now what we have to do, we have to actually adjust these indicators. So we're gonna start with the left chart right here. You're gonna click the three dots right here and you will select move to existing panel above. Then you're gonna do it one more time. Click the three dots, move to new panel above. Then we're gonna open the settings of the indicator. We're gonna go to the inputs. We will change the smoothing to 3. We will go to style and we're gonna hide the percentage K. We're gonna hide the upper band. We're gonna hide the lower band. We're gonna hide the background. We're gonna change a little bit the middle band. So you're gonna click right here. You will make it white, brighter. And you will select right here in order to make it a solid line. Then we will adjust the percentage D slightly right. We're just gonna make it thicker, something like this. Then hit OK. That's it. We are done with our left chart right here. Now let's move to the right one. We're gonna move the stochastic again and then move it on top of the chart. Then go to the settings, go to inputs, change the smoothing to 3, go to style, make percentage K thicker. Make percentage D thicker, hide the middle band, change the upper band to 60, change the lower band to 40, make the upper band green and make it a solid line and make the lower band red and make it a solid line as well. The last thing is to change the background to something neutral like gray and increase the opacity a little bit. Hit OK. That's for the stochastic. Now let's adjust the moving averages. Starting with the exponential moving average, click the settings, make it red, make it thicker, go to inputs, change the length to 200, hit OK. Adjust the simple moving average, go to the settings, change the length to 200, go to style, make it red, make it thicker, hit OK. And bam, that's the setup. Now let's talk about the rules. We're gonna start with our right chart right here and the stochastic indicator. What I want you guys to remember is that the area here between 60 and 100 is the bull control zone. The area from 40 down to 0 is the bear control zone, and the area between the 40 and the 60 is a neutral zone. Okay, so what the heck does that mean? What this means is that when the stochastic is above the 60 level in the bull control zone, the bulls, the buyers, are in control of the market. When the stochastic is below 40 in the bear control zone, the bears, the sellers, are in control of the market. And when the stochastic is between the 40 and the 60 level in the neutral zone, nobody's really in control of the market. Let me show you. During this specific time, the stochastic was where, guys? In which zone? In the bull control zone, in the neutral zone? Where? The stochastic was between the 40 and the 60 level, which is the neutral zone. Now look at what price was doing during this same time. Price was just going sideways. Why? Well, because no one is really in control of the market. There is a balance between the buyers and the sellers, so price is just going sideways. Now look at this time right here when the stochastic entered the bull control zone. It happened right here on this candle. So when you see this, what this tells you is that basically the buyers are gaining control, the bulls are gaining control over the market. And what you see on price, sooner rather than later, right? A nice uptrend. And what I also want you guys to pay attention to is that during this whole uptrend, look at the stochastic. It stayed in this bull control zone the whole time, right? Because the buyers are in control of the market. Now let's look at the opposite scenario. Let me ask you this, guys. During this whole time right here, where was the stochastic? Was it in the bull control zone, in the neutral zone, or in the bear control zone? Well, for the most part, it was in the neutral zone, right? You can see that it went a little bit in the bull control zone, but then we got a bear cross, it went back. Then it went a little bit below the neutral zone, but then it went back in, right? For the most part, it stayed in the neutral zone. Now look at what happened with the price during the same time. Well, the price is just going sideways. Why? Because no one is really in control of the market. There is a balance between the buyers and the sellers. But let's look at what happened when the stochastic actually entered the bear control zone. This happened on this green candle right here exactly. What followed was a massive move to the downside. And during this whole move to the downside, you guys can clearly see that the stochastic stayed in the bear control zone. So the sellers were in control of the market. That's why this happened to the price. It was only after this whole move down was done that the stochastic went back in the neutral zone, and then eventually it entered the bull control zone and there was a move up. Here is the third and last scenario where you guys can clearly see what is going on with the price when the stochastic is in the neutral control zone, right? What is going on with the price? Well, the price is just flat, right? Like I already mentioned 2 times, when the stochastic is in the neutral zone, it means that there is a balance between the buyers and the sellers, so price is just going sideways. Only after you see the stochastic breaking out of the neutral zone, that's when you can expect a move either to the upside if it breaks into the bull control zone, or to the downside if it goes into the bear control zone. So that's about the stochastic on our eye chart right here. What about the 200 simple 200 exponential moving averages? What do we use this for? We use these 2 moving averages to basically identify what the trend is. When price is above the moving averages, there is an uptrend, and when price is below the moving averages, there is a downtrend. So the whole idea here is that when you see that price is above the moving averages, you only take long trades, and when you see that price is below the moving averages, you only take short trades. What about our left chart right here? We don't have any moving averages here, but we have the stochastic. And the stochastic looks different than on our eye chart. What do we do with this stochastic indicator right here? Well, when the stochastic, this is the percentage dip by the way, when this orange line crosses above the 50 level right here, our white horizontal line, this gives us a signal to enter a long trade. So you enter long right here on this exact candle when you ride this bad boy up. Then when the stochastic, the percentage dip, crosses below the 50 level like this, which happened on this candle right here, that's when you enter a short trade and you ride this bad boy to the ground. That's it. But we have a very particular way to do that. You don't just buy every time when the orange line crosses above the 50 level, and you don't just sell every time when the orange line crosses below the 50 level. What you guys have to understand is the anchor and trigger time frame concept. What the heck is that? Well, you see that we have 2 time frames, right? We have a higher time frame here, the 1 hour time frame, and we have a lower time frame, the 15 minutes time frame. Our 1 hour time frame is our anchor time frame. We use this one for directional bias. We basically use it to identify what the trend is, who is in control of the market, and then we go on the lower time frame or the trigger time frame in order to enter and exit trades. Why do we do that? Well, we do our analysis on the 1 hour time frame because it gives us a clearer picture of what's going on, and we trade on the 15 minutes time frame because our entries and exits are more precise. That is the whole idea here. Now let me give you the complete picture. The first thing that you always have to do is to go on your anchor time frame and to look where price is in regards to the 200s. Is it above? Is it below? If it is above, then you wait for the stochastic to go in the bull control zone. Why? Well, because you want all the stars to align. You want the market to be in an uptrend, and you also want the buyers to be in control of the market. Only then it makes sense to enter trades, right? Because the reality is that if the market is in an uptrend but the stochastic in the neutral zone, well, nobody's really in control of the market, so the market is going sideways. Look at this right here. This is what I mean. The stochastic is in the neutral control zone. Look what's going on with price on the 1 hour time frame. It's just going sideways. Now, if we look at this exact same time on the 15-minute time frame, you will see that the market is just doing nothing, right? So during this time, does it really make sense to enter trades? Not at all. But let me tell you this. Many traders out there will try try to go short, we try to go long, and then we get wrecked. You guys don't want to be like these traders, right? You want to have an edge, and this is the edge. You wait for all the stars to align, right? You want the market to be in an uptrend, and you want the buyers to be in control of the market. Only then it makes sense for you guys to enter a trade. And look at this right here. The stochastic is going in the bull control zone. Now you go on your trigger time frame and you enter a trade right here on this very candle. Look what happened next. So do you guys want to be trading during this time, right, where nothing is happening, or do you want to be trading during this time when making money trading is just about as easy as picking money from the floor? You guys have to learn to work smart, not hard. So that's about going long. What about going short? When you identify that price is below the 200s, like it is right here, then you guys wait for the stochastic to enter the bear control zone. Again, you don't want to be trading short when the stochastic is in the neutral zone, because you're gonna get wrecked, right? Look what's happening with price when the stochastic in the bear control zone is just going sideways. You can't make money when price is doing this, right? You're only gonna get wrecked, right? So why trying? Better wait for the stochastic to enter the bear control zone, which happened right here, and only after that you guys can start taking these short signals, right, that you are getting, and you can start making money, right? Enter short right here, bam. Now let's do some testing. I want to show you a lot of examples, guys, and also I want you to see the performance of the strategy. So let's start right here. First of all, on our anchor chart right here, we have price below the 200s, and we have the stochastic in the bear control zone during this period right here. So this is a time when we're gonna be looking for shorts on the 15-minute time frame, right? So the first short signal came right here on this very candle. So we're gonna enter a short right here on the candle. We're gonna place our stop loss above the last swing high, which in this example is right here, and we're gonna target 1 to 1, 2 to 1, or 3 to 1. Let's stick with the 2 to 1. So let's 2 to 1 reward to risk. This is our first signal. However, you guys can see clearly that right here we got another signal. So this is another valid trade right here. Even though the first one is not yet closed, you can comfortably enter another trade which is gonna have the same stop loss, and try to ride this thing for again 1 to 1, 2 to 1, or 3 to 1. In this case 2 to 1 reward to risk is gonna be all the way down here. So that's the second trade. There is a third signal right here. However, if you guys look on the right side, you will see that the stochastic was already in the neutral zone, right? So we were not going to take this trade. In this type of scenarios where price is below the 200s but the stochastic is in the neutral zone or in the bull control zone, you don't take any short signal. You are just waiting for the stochastic to go back in the bear control zone, which happened right here. So now what happened next is that we got another short signal right here. So let's enter, let's see where exactly it came, right about on this candle. So that's a short trade, stop loss above this level, and you target 1 to 1, 2 to 1, or 3 to 1. Let's stick with the 2 to 1 reward to risk. So that's about short trading. As you guys can see, we got 3 valid trades right here, and all 3 were winners. So far so good. Now let's look at examples for long trading. Let's go back to these setups that we identified earlier, and let's see what happened. So we have here price above the 200s, right? We also have the stochastic going into the bull control zone. We figured out that this is the candle where we got an entry signal, right? And this is also the time when the stochastic entered the bull control zone. So this is a long signal right here that is valid. Stop loss below the last swing low, and you target 1 to 1, 2 to 1, or 3 to 1. Let's stick with 2 to 1 because that's what we've been using, right? And then you wait for the next signal. The next signal came right about here. Let me see, exactly on this candle. So this is another long entry, stop loss below the swing low right here. You can even bring it down all the way down here, so we can do something like this, or below this low right here, and you can target again 1 to 1, 2 to 1, or 3 to 1. Let's stick with the 2 to 1. So this is the second trade. Then we got another brief cross right here below and then above. So this is a long entry, right? So let's see, it's right about here. Stop loss below this swing low right here. Oops. And you target 1 to 1, 2 to 1, or 3 to 1 rewards to risk. So 2 to 1 is right about here. Let's see if this trade played out or it got stopped. stopped out. It didn't get stopped out right here, so that's fine. The take profit got hit right here, but before the take profit got hit, we actually got another long trade. However, at the time of getting this signal, the stochastic was in the bear control zone, so this is a signal that we were not going to take. Then we got another signal right here, and the stochastic was just, let me see, it was still in the bear control zone, in the neutral, it was actually in the neutral zone right here, so we were not going to take this signal. But then we got another one right here, which we were going to take. So let's see how did this one play out. So this is a trade right here, stop loss right here, and you target 2-to-1 reward to risk. And it looks like this trade we lost this trade, right? So the stop loss got hit on this one, so this is a loss. And here are the results for about, let me see, for 2 days you were going to have 4 trades trading long during this time. 3 trades were going to end up being profitable, and 1 trade was going to be a loss. Now the last thing that I want to show you is how you guys can set up alerts for this type of scenarios. Actually, for this type of scenarios, because this you're not really going to take. But the point is that I understand that you guys have lives, right? You cannot be glued to the screen 24/7, and you don't have to, right? You don't have to sit in front of the chart waiting for this to happen, right? What you can do is you can set up alert easily for this type of scenario, so you can get notified when this occurs, and you can just enter your trade from your phone wherever you are. The way you do it, you click on these 3 dots right here, add alert on stochastic, then you change here stochastic %D crossing up the 50 value, right? You then click once per bar close. You can change the message here if you want something specific, and then you switch to notifications and you make sure that notify in-app is enabled in order to receive notification on your smartphone, right? Don't worry about this webhook URL, this is for my bot. On your side it should be disabled. So once you have your alert, you hit create, and now every time when the %D crosses above this 50 line, you're gonna get notified so you can enter long trades. The opposite is for when you are trading short, right? When you are trading short, that's what you're gonna do. Add alert on stochastic %D crossing down is gonna be this time the 50 level, and you're gonna hit create, right? This is what adding alert for 1 pair looks like, but you can actually add alerts for many pairs, right? If you wanna trade multiple pairs simultaneously, right, you can add alerts for as many pairs as you want, and then whenever you receive notification on your phone, you can just open the chart, check if everything is alright, if this trade setup is valid, right, if the stochastic is in the bull control zone, where is price in regards to the 200s, right? If everything is fine, you can just enter your trade, place your stop loss, place your take profit, and just wait for the profits to flow into your account. If you want to get a complete cryptocurrency trading course, there is a link in the description of this video, and there is a link in the pinned comment as well. Once you click the link, you will be brought to this page, how to make a consistent income from the comfort of your home and be your own boss. Here you guys can just enter your name and your email address, and you will get a 100% free course, 150 video lessons with a total length of 14 hours. No credit card required, nothing, right? Completely free. You will learn everything you need to know in order to make money trading crypto. Go ahead, get the course, and I'll see you on the other side.